Christiansen from DR Solicitors, and thank you for joining our webinar. You should find on your screen, you've got some slides on the screen, and I've just appeared in a little box. There's also a chat functionality in Zoom, so if you go to your top bar, you should find this little chat there. If you want to ask any questions, then please do ask them through the chat, and I will try to answer them. I'll probably answer them all at the end, unless something particularly relevant for the particular slide comes up. Otherwise, I'll address any questions at the end. But thank you for joining. This is the second webinar that we've done this week on PCNs, and I'm delighted that there are so many of you who are attending. This is obviously a very hot topic at the moment, which we're involved with around the country, because obviously everybody has to do this, or everybody is doing it. I will just mention a couple of words about DR Solicitors, who we are, for those of you who don't know us, and then move on to the PCN. So we're a specialist firm of solicitors. We just work with primary care, that's all we do, and we do everything to do with primary care, be that partnerships, property, commercial contracts, PCNs, employments, disputes, you name it, we do it. But that's all we do. We are totally specialist. So PCNs. PCNs have a very new phenomenon, which it's existed in different forms throughout in different parts of the country for a long time, but they are new in the sense of that it's the first time that anybody has said this is what we need to do nationally. And in many ways, it's developed the model of working at scale. Working at scale isn't new, and I'll come into what the differences are of the different working at scale models, but the concept of doing it through a PCN is new, and as I'm sure most of you, if not all of you, know, the PCN concept is, it comes from the 5-year contract. So it's a DES, it's attached to the GMS and PMS contracts, and that is absolutely fundamental to understanding what a PCN is. It's essentially just an extension to GMS and PMS list-based contracts. What is important associated with that is the 5-year context of it. This isn't something which can easily go away because of the way it has been developed. So it's here for the long term, and what is absolutely clear is the additional money which has been secured for primary care, and there is a lot of additional money which has been secured for primary care over the next 5 years. Most of that money is going to go through working at scale, primary care at scale, and primary care at scale now means primary care networks. The key delivery unit, and that's not my words, it's the key delivery unit of working at scale will be primary care networks. So it's absolutely critical that everybody understands what they are and understands that the funding is going to come that way. So, as I say, working at scale isn't a new concept, but it's been around for several years, but this is different. And I just wanted to just touch very briefly on why it's different from the other working at scale models. Working at scale generally is to do with either GP federations, super partnerships, or now primary care networks. So what's the difference? A GP federation is an entity. It's a separate entity, which is usually a company. It has a geography usually which maps onto the CCG. So usually the geography of the federation is large. It's the same size as the commissioner. And lastly, it usually doesn't hold a patient list. So usually the purpose of federations is to hold other contracts, non-list-based contracts. So if you think about those three things, list, geography, and entity, GP federation, no list, large commissioner-based geography, and an entity. Super partnerships are an entity as well. They are a partnership, a large partnership. They do hold patient lists, because they are a merger of the GMS or PMS contract holders. But the geography is interesting, because the geography is whoever you want to merge with, which if you're going to merge makes absolute sense, because the last thing you want to do is merge with people who you don't get on with. So super partnerships are mergers of practices who get on well together and therefore want to work together. However, what they're not as a result is there is not a defined geography. And most super partnerships are of a sort of a geography of whatever they happen to want to be. And that can be over a very widespread geography. Therefore, they're not focused around the patient geography. They're focused around the practice geography. Primary care networks, on the other hand, have they're list-based, like super partnerships, but their geography is very, very tightly defined. Federations tend to have a geography tightly defined around the CCG. Primary care networks are even more tightly defined around a community of 30 to 50,000 patients, which is usually considerably smaller than the CCG. However, the key thing about primary care networks is that they are not an entity. There is nothing that constitutes a primary care network other than the contract between the holders of the DES. So there is no entity, there's nothing you can point at and say, that is a primary care network. It can't hold any contracts, it can't contract with anybody, it can't do anything. So that's fundamental to understanding why a primary care network is different. And that creates a lot of issues as to what which need to be resolved. And these are some of the issues which need to be resolved, which everybody will be hearing about through all of the reading they've done of the lots of advice which is out there. Employment and service delivery models, a lot of that is you'll have read about in the BMA advice. Irrecoverable VAT, again, that's a lot of people will have heard about the problems of VAT. Pensions will be important if you subcontract any of the services. Are the incomes associated with the employees, can they pension that? Financial control will be absolutely critical. There's going to be a lot of money flowing through PCNs over the next few years. Think back to my previous slide about where all the investment is going. It's all going to PCNs, and in 5 years' time, you're going to be looking at your average PCN is going to have at least £1.5 million going through the PCN. Now, that would be interesting in an ordinary business which had an entity, but in a PCN where there is no entity, effectively what you're doing is you've got a lot of money flowing through a contract between parties. There's no framework, there's no business around it to control it. So the financial control is going to be absolutely critical. Associated with that, you've got to decide, well, if governance and control is important, what are the roles of the different people in that? You've got a clinical director, but a clinical director's role is really a strategic role to think about the way that you're going to integrate services, which of course is the underlying objective, but it's a strategic role. So if you're going to control the business of the PCN, perhaps you need some other officers, and that's what I'll come back to that. You've then got questions around the governance and decision making, because there's both practices within their core network practices and other parties, and I'll come back to the way that will work. Liabilities and indemnities, those, there will be large potential liabilities, and how will those be shared? Dispute resolution, if you've got large amounts of money flowing around, you're going to want to have something which is more than just a mediation service. You're going to want to have something which is robust, where you can rely on that if there is a dispute, you will be able to reach a resolution, a definitive resolution. And then there are other issues around subcontracting and management, but perhaps the most important thing is actually the last point, which is flexibility. The one thing which is absolutely certain about PCNs is that they're going to change. There is no way that the PCNs, as they're set up on day one, will be able to operate in the same way in 5 years' time, partly because there's going to be more money going through them, partly because the above issues there need to be resolved, and some of them can't be resolved. They can't all be resolved at the same time. So they will have to be resolved. And then also you're going to have to work with other members, because the whole point of this is to integrate care outside of hospital. And so you're going to have to work with other members, and that's going to influence the shape of the PCN. So building in flexibility at this stage is absolutely critical. Now, one of the things we find is often a little bit confusing is people don't necessarily realize who actually constitutes a PCN. So let me explain. Within a PCN, you've got what's called core network practices. The core network practices are the practices who hold the lists within that PCN. Now that is what the DES talks a lot about. So everybody kind of gets that the surgeries are members of the PCN, but they are not the PCN. The PCN is the core network practices plus other members. So when you're drafting your PCN agreement, you can't just think about the core network practices who have their DES. What you actually need to think about is all of the other service delivery organizations who deliver health and care services to the community. So the 30 to 50,000 patients in your community, who delivers health and care services to them? Once you've identified them, then you need to talk with them and they invite them to be members of the PCN. Because going back to what's the purpose of the PCN, the underlying purpose is actually to integrate between the core network practices, but most importantly, to integrate services for the population between health and care providers and all of the different providers who provide those services. Think of it as a big table. The big oval ring there is one big table where all of the parties, all of the providers who are delivering services, they sit around the table and agree how could they deliver those services better. That's what the PCN is, not just the core network practices. On top of that, you've got outside stakeholders, outside organizations. Those of you who are busy filling in your schedules will be aware of Schedule 7. Schedule 7 talks about outside organizations. So what are outside organizations? Those are organizations which are stakeholders who don't deliver services as such, but they have a say in the way things are done. So they might be the council, they might be patient groups, the Health and Wellbeing Board. Everywhere has different stakeholder groups. It's up to you to identify them. The way that the governance works between these different parties, it varies, and I'll come back to that. And lastly, you've got subcontractors. Now, those are providers of DES services. So you're all familiar with the DES. The DES is what the core network practices initially are going to deliver. So the clinical pharmacist and the social prescriber, those are services which the core network practices have to deliver, but they may choose, and indeed many core network practices do choose, to involve a federation and ask the federation to provide those services or coordinate those services on their behalf. What that doesn't do is make the federation for those services a member of the PCN. What it does is it makes the federation, or indeed any other subcontractor you choose to deliver those services, a subcontractor to the core network practices. And there's a big difference because they're not the PCN for those services. They might be a member of the PCN for other services that they provide, but for those services, they're a subcontractor, and that has important implications. So from a legal perspective, these arrows represent contracts, and contracts are important because contracts determine who is responsible, who is going to be managed, and who is going to have to account for what happens. The DES is simply part of the GMS or PMS contract. That's all it is. So to understand the DES, you actually need to go all the way back to the GMS contract or the PMS contract because those clauses are still valid for the DES. So each surgery who has a GMS PMS contract is responsible for delivering the DES, the clinical pharmacist and the social prescriber. You then have to have a PCN agreement which talks about the governance of both the core network practices and the members. And remember that the PCN is all of those, it's not just the core network practices, even though the governance model will inevitably be different between the two. And then if you choose to use a model whereby you subcontract delivery of the DES, then you need a subcontract arrangement between the core network practices and whoever you use to deliver those services. What you can't do is you can't just ignore the subcontract, because ultimately if something goes wrong in delivering those services, the place where NHS England is going to go is to the practices, because they're the ones who are on the hook for the DES. So therefore you need to have some kind of contractual relationship from those practices to the providers of the DES, and that's different from the PCN agreement. And then lastly, at a more detailed level over time, you're going to need some form of collaboration agreements between the different health and care providers. So that might be between the nurses and the practices, or it might be with the social care providers, or whatever it happens to be. You're going to have some detailed agreements as to the way those are going to work. And that essentially, those collaboration agreements, will be the job over time of the clinical director. So good question from somebody there, which is that is the subcontract between each individual practice and the federation? Yes, is the short answer, but logically they would all have the same contract, but they would all have to be named on that subcontract down to the federation. And lastly, there would have to, with the other organisations, those Schedule 7 organisations, there had to be some form of memorandum of understanding between the PCN and the Council or Health and Wellbeing Board about what happens there. Not a long thing, but over time, that document would have to be developed. So as you see, it's something which develops over time. Where you are at the moment is you need to get this PCN agreement, the big oval. You need to get that signed. But it won't. Whatever you do now, if you look at it like this, you will very quickly see that you can't build the whole thing now. What you actually need to do is get the foundations in place. The foundations need to be solid in order to enable this to build over time with the different members and parties as they start joining the PCN. You need to have the framework in order to be able to have the discussion to put things together. So some of the principles you're going to want to have involved with that are, firstly, cost sharing. So this is absolutely fundamental to what is going on in your DES. The primary care network, as constituted by the core network practices, it is a cost sharing agreement. So every now and then, well, quite frequently, to be honest, we hear about people talking about what if it makes profits, what if it makes losses. It can't make profits and it can't make losses because it's a cost sharing arrangement. So if you think about it this way, if you go out for dinner with your friends and you're going to share the cost of the bill, you've got to share the cost of the bill. There's no profit or loss involved. It's simply a cost sharing arrangement. Now, if you were all planning to share the bill and it came to, I thought it was coming to £80, so you put £20 in the pot, and then it came to £90, well, that's not a loss as such. That's simply you're all going to have to chip in your share of the additional cost. So that's the way it works. There's no profit or loss which can be hidden anywhere. It's simply a cost-sharing arrangement where all the costs need to be shared. If the cost comes in lower for the dinner, well, you get some money back. That's the way it works. So that, following on from that, is a key principle that all the PCN-related liabilities need to be shared, including VAT, if applicable. And so the trick then is to identify, well, what are the PCN-related liabilities? And that is where the financial control and the PCN agreement come in to make sure that all the parties agree what is and what is not a PCN-related liability. If you're going to go out for dinner, do you share the cost of food? Maybe pay for your own drinks, that sort of concept. We would also recommend writing into there's no requirement to merge, because many people think that maybe this is some way to push people together. We don't think so. We think that there's no reason why practices should merge as a result of this. Indeed, we think that if you do it unwillingly, that would be a very bad idea, because most mergers we end up unpicking are the ones where people have been forced to merge. And lastly, we think it's really important to keep all the PCN activities identifiable and separable, because it's going to change. The one thing it's guaranteed about PCNs over the next 5 years is change. So if you can't identify what belongs to the PCN and what things happen in the PCN, it will be very hard to change. I'm sure everybody's read the BMA guidance about lead practices and flat practices and all that sort of thing. Well, yes, but we're not overly keen on those, to be honest. I'll tell you why. The flat practice sounds great, but what it actually predicates itself on is a shared employment contract. And what a shared employment contract is essentially that you're saying to your employees, that you work for multiple employers. And that's tricky, because if you've got 5 employers and the poor employee wants to go on holiday next week, who do they ask? If there's a problem, who manages them? And what logically happens in those kind of scenarios is that one practice takes the lead, and that practice takes the lead is then taking control. And the one thing that defines a employment relationship is control. So suddenly you've written one thing and you're actually doing something else. And then the moment there's a dispute, then the document starts to become a bit invalid. And that's not a good place to be. Those of you who've ever worked in a practice without a partnership agreement, in a partnership at will, and had a dispute, you'll know how that's a problem. So not keen on the shared employment contracts, think that's a very, very difficult way to go. But at the same time, not always keen on lead provider, because lead provider implies that one practice needs to do it all. Now, why would that be? Why not share the resources and the responsibility around? In our view, that's probably a fairer way to go. It's what we call modified lead, but also simpler. So if you're going to employ somebody, you could employ the clinical prescriber one place and the social prescriber somewhere else. That has both shares risks, shares liabilities, shares the admin, but also actually reduces the VAT risk, because VAT is all about VAT thresholds, and if you share the cost around, then you can stay, at least in the early years, below the VAT threshold. Moving on to subcontracts, many PCNs are looking at subcontracting to the Federation, or indeed others. Just bear in mind that if you do subcontract, then it doesn't take away the responsibility of the core practices. The core practices have to manage and have to ensure that that subcontractor is competent and qualified. They have to notify NHS England of the subcontract. They have to get approval. You can't just do it. You need to have approval. NHS could object if they don't like it. It also increases the risk of VAT, and one that is not so well known is there is actually a prohibition on subcontracting. What does that mean? That means if the Federation or anybody else provides the services for the DES, the Federation becomes a subcontractor. If they then get somebody else to do it, like a trust, or subcontract it to a charity, that becomes subcontracting, and that's not allowed. So when doing this, a perfectly good model works well, but just be aware there are lots of restrictions on what you can do. The subcontracting ban exists in the GMS contract, which, as I said, the GMS contract is essentially the DES. So lots of things to think about when subcontracting to a federation, but I think the most important thing to realise is it doesn't take the problem away. You can't just say the federation is doing it, because ultimately it belongs to the practices. It's their DES, it's their GMS contract. And ultimately, if something goes wrong with the delivery of those services, guess what? That's a contractual breach of your GMS or PMS contract. And that contractual breach is handed to the practices, not to the federation. So you can't completely get rid of responsibility just by getting somebody else to do the work. Then you've got the question of financial control. As I said, the financial control is fundamental to what goes on, because there is no, if you have a partnership or a company, then the money goes into those entities, and at least it's ring fenced. There's a fence around the money, and you can control it to some extent within that entity. That's not the case with your DES monies. Ultimately, the DES money belongs to individual practices because it's part of their contract. The DES is your GMS contract. All that's happening is that the shared money, so the 70%, the 100%, and the £1.50, it belongs to the individual practices, but it sits in a shared bank account. That's all that's happening. So when you talk about your nominated payee, it doesn't mean to say it's their money. It means it's each individual practice's money, but in a shared bank, in somebody else's bank account, or a shared bank account. So our view is, once you realize that, it's not usually a good idea to actually put it into somebody else's bank account. It's a much better idea to have a shared bank account which somebody may be, one practice may be administering for you, or indeed a federation may administer for you. But it's a shared bank account where you can point at that bank account and say, that is the PCN money. And then what you do is you put all of the money into the PCN bank account, because effectively you treat it like a business. And you say all of the DES money goes in there, and indeed any missing money. So the missing 30% goes into the bank account. And then you can build a budget around that and say, okay, for this year we're going to have, we think our expenses are going to be X, Y, Z. Therefore we need income of A, B, C. We're getting so much from the DES, and then we're missing this bit, and we're going to have to contribute it. And also you can build a cash flow forecast around there to say, we think that our expenses are going out at such a time, but our income is coming in then. Do we need to hold some kind of capital? And in that way, you get control around your PCN monies. You then have to share the money out, and that would almost most logically be on list size, but there's nothing saying you have to do it that way. You share out the income and the expense, because remember that this is simply sharing the cost of the dinner. So just because you shared the cost of the dinner doesn't mean to say it's not your cost. So that cost needs to go into your P&L, the P&L of each of the core member practices, as does the revenue. The revenue also needs to go in there. So you're going to need somebody to draw up a set of accounts for the PCN from that bank account, saying total income X, share that out between the practices, total expenses Y, and share that out among the practices. And also you're going to have to, as I said, agree what expenses constitute PCN expenses. And that's where the agreement comes in, because you are going to want that to be legally binding. You're going to want to be absolutely certain that no expenses that shouldn't go in there, and vice versa, all the expenses that should be in there do go in there. And obviously salary is only one of the expenses. There's also on costs and loaded costs and admin costs, etc. All of those things need to be worked through. What do we think collectively should be the expenses of the PCN? So moving on to governance, excuse me. As I alluded to, there is two levels of governance you're going to need, because if you think back to the picture, you've got core network practices, but that's not the PCN. You need core network practices and the members. And the governance associated with them is going to be different. So the core network practices, in our view, what they need is, firstly, they need to appoint the initial clinical director, which you have all done, I would imagine, because you've submitted the forms for the 15th of May. The clinical director's role is to think strategically around how to integrate care in the PCN. You've got a lot of money flowing through this thing, so our thoughts are you really need to have somebody whose job is to be the finance officer. Now, that may well be in year one a very part-time job. In fact, it will be a very part-time side of desk job, but somebody needs to make sure that they understand the money coming in and the money going out of the PCN bank account. So you need to name somebody with a job of finance officer. You also need to name somebody whose job is workforce officer. Maybe the same person, maybe not be. But the workforce officer's job is to, excuse me, the workforce officer's job is to understand what services need to be provided and how and where and when are they going to be provided. So take the clinical pharmacist. Where are they going to be? Where are they going to sit? What are they going to do on Monday? What are they going to do on Tuesday? What's their terms and conditions? And that was a question which was, I can see was raised a few minutes ago about the terms and conditions. The terms and conditions really are something which are determined by the employer. So if you have the employer of an individual practice, that individual practice needs to give their employee terms and conditions, but in all of the practices are bearing the costs. So if practice A is employing somebody, practices B, C, and D, excuse me, practices B, C, and D are going to want to know what those terms and conditions are, because they're ultimately going to have to pay for it. So that's an ongoing role, because obviously people's terms and conditions change as their income changes, their bonuses, their salary, etc. People come and go. All of those costs change, and so somebody needs to coordinate those terms and conditions and make sure they're agreed between all the practices. In addition, you're going to need a data protection officer. Data protection is a very complicated area, which, yeah, to be honest, the national template is now. You're going to have to sign a national template. That isn't out yet, and it's got to be signed in theory by the end of the month. So there's going to be a bit of a rush on there. But you're going to certainly need a data protection officer. That is absolutely guaranteed. Somebody who is going to coordinate the data protection across both the core network practices and the members. And then you're going to have to work out voting models. Each practice is going to have a representative, and that representative is going to have a vote, but what's that vote worth? And that will change depending on the nature and the culture and the size of each PCN. So one of the things which will be very variable is exactly the voting models, and there's no one size fits all. But there are about 3 or 4 models, which one of those is usually appropriate. Question here. Okay, so the CCG are stating that NHS England will only agree to pay PCN monies into a practice account, which can then be transferred to a PCN. That, as I understand, is absolutely true. The problem, as I understand it, is a systems one, as it always is, that you can't have the system attaches to an entity, and each entity can only have one bank account. And since the PCN is not an entity, it can't have a bank account. So systems problem, but our advice is, yes, the money will have to arrive into a practice bank account initially. We understand that's changing, but the golden rule is it must be transferred from that account into the PCN bank account as soon as possible, and that would be in your agreement. So governance of the whole PCN, that's different from the individual PCN. The individual core networks, because there's more members in there. So what do they do and how do they vote? They decide on different things from the core network practices. Core network practices decide on how their DES monies are deployed and how the services associated with that are deployed, and the governance of them. The members as a whole, which includes the core network practices, they decide on the health and care plan for the community. So how are you going to deliver better services to your 30 to 50,000 patients? That kind of discussion is what's led by the clinical director. Clinical director's job is basically to figure out how do those things work together. And you're going to have a plan for that, and that plan is going to have to be agreed by the members. So our view is most logically the subsequent clinical directors actually are appointed by the members as a whole rather than just the core network practices. But that's something which different people have different views on, and it's something which will evolve over time, because initially most PCNs don't even have other members. But over time, I'm expecting that will happen for the clinical director. And our view is that all members will then have a vote on the health and care plan, because essentially they've got to deliver it. So they'll have some kind of vote, some kind of say, and that will have to evolve over time, because as new members come in, they're going to want to influence the way that works. But initially, we would suggest probably one vote for each organisation. And then these outside organisations are also part of the governance. They're not members, but logically they would be allowed to come to meetings and have a say, but not a vote. So in terms of where we think this is going from here, the flexibility point is really critical here. The way it is structured at the moment is complex. There are a lot of members. PCNs are much more than just those core network practices. They're all of the members and involving those external stakeholders, and then these other relationships with subcontractors, all of which gives rise to those problems we identified earlier on, not least VAT, pensions, controllership, that sort of thing. So how do you resolve that? Well, the most logical way to resolve it is in something called a VAT cost sharing group, where you would put the costs, think the cost of your dinner, into a limited company. You can't do that at the moment because, well, you can, but if you do, you're going to run into all sorts of problems, not least pension problems. But over time, this is something we're discussing at senior levels, and there seems to be a lot of consensus this is where it's going to go. By changing some of the rules, which need to be changed, you could create a VAT cost sharing group around the core practices with a limited company, put the shared services through there. Once you've got the pensions and a few other problems sorted out, then you can share costs in there and avoid the VAT. So we think that's where it's going to go. The bank account would then logically sit in that limited company, and the controllership of the finances would then be in there as well, ring-fenced around a company. This is a few years off, but it's a logical way to go unless the core network practices want to merge. And as I said previously, I think that's a seriously bad idea unless you really want to merge. Certainly never get forced into merging. So this is a way to resolve some of the problems going forward, but it's something which you need to build your foundation so that it can go there. So summarizing around your next steps, where do you need to go? Well, the most important thing is you need to get your PCN agreement sorted out pronto, because you need to get that by the 30th of June if you want to secure the money. So that doesn't leave you a great deal of time. But that PCN agreement needs to be built as the foundation for the future PCN, not just as a way to share some money out. So you've all submitted your DES registration forms. If you send us those and any drafts to your Schedule 1, we can use that as the basis of drafting a PCN agreement, and we would then take instructions over the telephone and draft the agreement. And those of you who want to do that, that's the cost that we do it for, a fixed fee of 1995. So that was an introduction to PCNs, a canter through. It's something we've given a lot of thought to, and we think we have the right foundations to it. But the key to it then is to build it from there. Any questions that anybody would like to raise now? So looking at the questions that are coming through. So there's a question about the money. Does the money not come direct from the CCG to the Federation account set up for each PCN? Short answer is not usually. It can do if the Federation happens to have a primary care contract. If they do, it can go to that CCG. That doesn't change the subcontract relationship unless the Federation happens to hold a list-based primary care contract, because most APMS contracts, which are still primary care contracts, are not list-based. So the short answer is probably not, but just possibly. It's certainly one to take advice on. Now, in terms of other questions in here. So other questions we got. As in year one, the money into the PCN will be limited. Surely the network agreement can be a working document that can be amended as we work more closely with other providers. It does not make sense to spend a lot of time and money at this stage making it more complex than it needs to be. Well, yes, it needs to be simple, but at the same time, it's a legally binding contract. It's the only contract that you have between the members. The PCN is nothing more than a contract. It doesn't exist. So if that contract is loose and overly or not, it's not written in a way which is binding, then it's useless, because the only reason of having a contract is something you can rely on in order to bind the parties. So yes, it needs to be flexible, but it mustn't be a working document, a draft, or just a loosey-loosey kind of document. It must be binding. So you need to work out what's the important things and get the important things agreed and work out a model for how you're going to change it. So I hope that's clear on that. We talked about the staff contracts. They can have different terms and conditions. What the important thing is that those are agreed between the members, and that's the job, in our view, of the workforce officer. Does the PCN need a chair? Are you not the clinical director? Yes, I completely agree. I think that the PCN does need a chair, and our recommendation would be it's not the clinical director. The chair is an administrative role, and it's somebody who calls meetings, documents meetings, and it's something which we believe should be additional. If the accountant is doing budget forecasts, etc., what does the financial officer do? Well, the accountant would be somebody external, in my view. Somebody who's going to, you would lodge, if you want to increase the trust around the account, excuse me, you would probably get an external accountant to look at the numbers. The financial officer is your internal person whose job it is to administer the accounts. You can, of course, outsource that. That's absolutely fine. You could ask a federation to do it if you want to. You need to have somebody whose job is to do the accounts. What about the contract for the clinical director? Really good question. And what if they're sick? Well, who pays their income? Ultimately, because the PCN doesn't exist, the PCN can't employ anybody. The employees and the officers are all employed by usually the core practices. So if the clinical director or indeed anybody else is off sick, then what you do about it is what's agreed between the parties. The money would probably still flow, but again, that's down to the parties to agree whether that happens. There may be a substitute, there may not be a substitute, but the money, it's just a shared expense, and it's in the agreement. So again, the importance is getting a legally binding agreement. If it's loose, then people aren't going to pay. If you've got expenses to share, well, you're going to want something to rely on, something you can ultimately sue on if there's a problem with the agreement around sharing those expenses. The BMA haven't brought out their data governance things. Absolutely, that's completely true. They haven't. We're still waiting for that. So I wouldn't do too much on the data governance at the moment, other than get the data officers to talk to each other and start thinking about what kind of controls are going to be there, but don't start documenting anything yet. Do we need to have all these officers in place in the beginning? Well, no. What you need is responsibility, and so somebody needs to have the job of understanding the finance and understanding the workflow. So no, you don't need it. There's no obligation to have it, but I don't know how you're going to manage a PCN without somebody having the job to do those things. It may well be a very, very, very part-time role in year one. I suspect it will be, but it would be helpful, in my view, to name somebody with the job. You've not answered the question about who pays the clinical director. So ultimately, the question about what happens if they get sick is something which is subject to the agreement of the parties. My view is that it's a service which needs to be delivered, and that service needs to be paid for. Happy to take that in more detail afterwards if somebody wants to speak to me. Next question: can the clinical director be paid by the federation if the federation has an APMS contract? The clinical director role is very different from the other ones, and yes is the short answer, but it's probably not my recommended approach. So if you want more detail on that, give me a call. How long will our work take? We will work as quickly as we need to. We appreciate the deadline, and the faster you instruct us, then the faster we can get onto it. What we would do is we would get a first draft out to you as soon as possible. We understand the complexities of the governance processes. We understand you're going to have to want to go back to everybody. So the last thing you need is a first draft turning up on the 29th of June. What are other PCNs agreeing about the CD is sick? People are coming up with different answers on that. Yeah, people have got different answers, but it's true about, if you think about it, anybody who's sick, who's covering the service and who pays for it. And our view is that this should be, the answers, there's a couple of different ways to do it, and I'm very happy to talk those through, but no time now. Our PCN is thinking about joining the other PCNs within our CCG to appoint an overall PCN manager. Does that sound like a good idea? Yeah, absolutely, sounds like a good idea to me. Somebody needs to manage them, and if you want to share the resources, why not? Possible VAT implications on that, though, so speak to the accountants about the VAT implications. Do you see any pros and cons of 2GP sharing the clinical director role? No, so long as you've defined it carefully, then I don't see there's particularly any problem with that. The only thing is the clinical director is, think about what their job is. Their job is to coordinate integrated care across the community. So long as the 2GPs realise that, and all of the members realise that how they're sharing a job, what you don't want is the confusion of who do you go to with an integration question. But no problem with job sharing in principle. Do I think the June deadline will be moved? That's a political question, which I don't know. I spoke to Richard Vautry yesterday, and he said no, so maybe that gives you the answer there. Can any insurance be taken out to CD as sick, like locum insurance? Yes, you can. Yeah. The question always comes back to what cost are PCN costs. That logically would probably be a PCN cost to pay for the insurance. Okay, and can we have a copy of the slides? We can. Yeah, you can certainly have a copy of some of the slides. I mean, the key thing is the voiceover, but I will circulate what I can. So that is now 15:15. So thank you so much to everybody for joining. I hope that you found that useful. I certainly enjoyed the webinar, and please do get in touch with us. We're delighted to help with drafting the PCN agreements, and we appreciate the deadlines. We appreciate how much pressure is on all of you to do this. So thank you everybody for joining, and have a lovely day. Thank you very much. Bye bye.